in this evening, and for the first time this evening we are running this on a YouTube live event too. So those of you watching on YouTube, welcome. Those of you watching on Click Meeting, welcome. We have a number of things to go through this evening, and the first thing I'm going to say is welcome to you. The first real thing I want to get off my chest is that we're going to have people this evening I know that have very little trading experience, if any, and we also have people tuning in that have some experience and quite experienced as well. So what we're going to do is, the first thing is, if you have little or no experience as at trading or with trading, please don't worry. Please watch this video back. We are recording it, and what we're going to do is go through some stuff later in the workshop for those of you that haven't much experience, and we can do some training, some instructions and coaching, etc. But for those of you that have experience, obviously tonight we're going to get straight on to talk about some strategies, show you a little bit about ATS and how ATS works and why it does what it does, and talk to you about some of the experiences we've seen from people using ATS over the last few months. So please don't worry if you are finding it's going over your head a little bit. There is plenty of support, plenty of help at hand, both here and all over the world, especially in Africa. Now we have an office in Johannesburg where we can help those of you that want to get into trading. So the first thing to talk about, the purpose of this evening really is to show you guys one or two new strategies that we've been looking at, show you some results that we've been looking at. I want to talk also about the Trader Club. Now, the Trader Club is a membership where we're going to do some very special things each month. We're going to have events. We're going to have events in the UK and have events in South Africa and any other regions we're working in throughout the world. That's going to be starting, that's going to be launching, and it's going to be a very valuable membership to have. It's a subscription based, and it's going to be information sent out each month. So there's lots of information on the Trader Club on our website, www.tradeinsights.com. Also tradeinsights.co.za too. Going to talk a little bit about the power of ATS, what it does, what the difference between ATS and conventional manual trading, and what the difference is between ATS and robot trading and buying signals and buying indicators. Because what you've got to remember with ATS, and I think I've said this in some of the videos on our YouTube channel, and our YouTube channel is getting a lot of videos put up every single week. So please, if you haven't yet subscribed to our YouTube channel, please click the subscription and the little bell icon, and that will allow you to get notified every time we put some new videos up. So what I've said on the YouTube channel on a few of the videos is, you don't need to understand what an algorithm is to be able to use it. You certainly don't need to be an IT genius to be able to create an algorithm. And you certainly don't need to understand what an algorithm actually is to be able to use it. So in essence, over the years, people have tried to automate their trading by means of just actually telling a computer to go into the market at a certain time when a condition is met and then come out of the market. But that takes money and time to create. And I've got a couple of images to show you this evening of somebody who does it exactly that way and the length of time it takes to do that. So I'm going to show you the benefits and power of ATS, because ATS wasn't set up to provide people with strategies to trade with. ATS was provided or created to provide a platform that can create their own strategy. So one of the other things I'm delighted to announce this evening is what we call a league table. Now, the league table we're launching this evening is going to be a league table which is going to be published quarterly, and is going to be a prize. It may be a cash prize. It's probably $100 for the person at the top of the league table every quarter that has the most profitable strategy. So the strategy that's performing the best. So don't just rely on the strategies that I show you and share with you. By all means, you can use them, but tweak them, create your own, because you'll be surprised with what you can create just by adapting strategies slightly, in one way or the other. So the last thing I'm going to talk to you about this evening is the situation between demo trading and live trading, because demo trading and live trading are two different things, although they are trading on the same price levels and going into the market. You can have a demo account, you can have a live account next to each other, both entering the market at the same time, both coming out at the same time, but it's only the live one that's making any money. So the demo account is the difference between demo and live. Is demo is for testing and for running things, and your live is for using to get yourself into the marketplace. I mean, if you see a demo account in profit, then get those strategies running live, because that's the only way you're going to actually make any money with this, because you're not going to make money on demo. We've got a client who's used our system for 3 months, and he opened an 100,000 euro, this is in euros, 100,000 euro account. And within the 3 months, he was 12,000 euros up. The strategies he'd created his own strategies. He'd listened to what I'd said, and he'd created his own strategies. He'd used ATS to create them, backtest them, and then put them into the market. He was 12,000 euros up after 3 months. But the sad thing is, it was on a demo account. So you can see the difference. Had he put those into a live account and those onto a live account with real money, he would have been 12,000 euros up on his trading. So that's the power of ATS. Without getting involved, without pushing buttons daily, you can create your strategy in minutes. You can backtest it in minutes, and then you can see it running live. So that's the sort of agenda for this evening. So I'm just going to get straight into it. I'll put some slides together. So I'm just going to open those slides up now. And as you can see, we've got our globe up at the moment. We've now opened our office in Johannesburg. We've got lots of interest from all over the world, all over Africa, all over Europe, and as far afield as Australia. We're getting inquiries for ATS. So, things are looking really good for the future. Okay. So welcome to this evening. Welcome to Trading Sites. As you all are aware, my name is Mark Sapsford. I'm the co-founder with Rita Kumar of Trading Sites Limited, and we founded the company 3 years ago. And the reason for this was just to really make a difference and make an edge with the retail trading environment. We've teamed up with a fantastic team of developers, and they've created the platform, created what you're going to see this evening, and we're really proud to be and privileged to be working with ATS, powered by Tecton. So welcome to this evening. A little bit about me, and then we'll get straight into the nuts and bolts. As you can see, if you look at the screen, I've got a lot of experience in the industry, but it was in 2016 where we first started discussing automatic trading. And automatic trading, what I mean by that is where trades go into the market, out of the market, automated completely. And as I say, we've seen many different people try and do this, making money on the creation of it, making money on the supply of signals, but you really don't need to do that, because ATS is a free to use platform. We're delighted to partner with X-Station brokers. X-Station is our charting software. So as long as you have a X-Station or an account with an X-Station broker, you can actually use this. And obviously, if you're one that's watching this new and you're from a different part of the world, I see we've got people from all over the world watching this tonight. Let us know where you are in the world, what you're doing, and send us an email to the email addresses you'll see later, and then we're more than happy to look at getting you on board with using this. So with over the last 3 years, we've worked hard, gone through a lot of pain. It's not been easy. It's certainly never been easy, but creating what you're going to see tonight is really been the utmost of we're proud of what we've achieved over the last few years, and we're proud to actually represent a true product that really is giving people an edge in their trading. So straight into the nuts and the bolts of this. Okay, so what you can see here, I'm just going to move this out of the way if I can, is a Excel spreadsheet. Now this Excel spreadsheet is an Excel spreadsheet of the X-Station closed positions from the 1st of September, so down here, the beginning of the month, to today. Okay, so this is an Excel spreadsheet. Now the green are what we call winning trades, and the red are the losing trades. Notice how many more green winning trades we have than losing trades, but notice the winning trades more often than not are higher value than the losing trades, because the strategy I'm going to show you this evening is a strategy that's designed to, when your trading is going in your favor, to keep the trading running, keep the trade running into more profit. If the trading strategy has been created so that when you're in a position where the market isn't going in your favor at that point, and we do get things wrong, we do get strategies wrong, we don't win every trade, then the stop loss will kick in. And as you can see, the losses are almost identical in value to the nearest £10. So this particular strategy, you can see there was a couple of 2,000 wins, 1,200 win there. So this is for the month of September. Now I'll show you the actual, and I've done this on Excel purely and simply so you can see clearly what it is. But this is the next slide is the real Xstation report. And if you look at the bottom here, you might just be able to see that where it shows you 4,100 profit. That's in 18 days. Take a couple of days off for the weekends. So it's probably in trading days, that's probably about 13 to 14 trading days, and it's made over 4,000 on this particular account. That's over 4%. So that's a pretty damn good result on that from this month, on the strategy that I'm going to show you. So what I'm going to do now is I'm going to show you a couple of screenshots of the trades themselves. I've taken the two reasonably largest ones. Okay, so this one here, as you can see, we have a dotted white line going all the way up the screen. So the trade entered here, it was a buying trade. It was actually a buying trade. So remember, when we are trading, just to go back to a little bit of basics, when we are trading, we are not physically buying or selling anything. We're just trading the moves in a certain direction. So when we are buying, we want price to go up, i.e. up like this. And when we are selling, we want price to come down. We're not selling anything. We're not buying anything. Buying and selling is the instruction to which direction we want the trade to go to the broker. So we have, and I'm going to explain the difference between and the journey between you, the trader, ATS, and the broker in a very few moments. I'm going to just explain to you in a timeline how that all fits together neatly. Okay, so this particular trade was entered here on the 17th of September, and it closed out here on the 18th of September, profit here. And this is a feature that's built into Xstation to show you your trades on the chart themselves. So the strategy bought at the bottom, closed out at the top. Let's look at the next slide. The next slide is another trade. This one was 129 pips of profit. It's over £2,000 of profit. And it actually bought at the bottom here on the 12th of September. And it says there 1:42 in the afternoon, gives you the open price. And it went all the way up in the afternoon, 1,700 hours approximately, and closed out up here. So this was around about 4 hours. These are 1 minute candles, 1 minute bars. So these bars represent each of them 1 minute of time. So it's a very, very fast time frame, and 1 minute trading is an art, because you really can't sit there trading this sort of stuff manually, because you've got to have either, you've got to have nerves of steel, because the market's going up and down all of the time, or you've got to sit there watching it continuously. Now, the problem with that, of course, is you're not going to be able to watch your charts continuously minute by minute by minute. So that's the beautiful thing about ATS, where once you've set the strategy up, it will run and enter the markets for you. And you saw earlier all the trades it's taken so far. So there's a couple of screenshots for you on a couple of trades from this last few days. So in essence, this is how it works, okay? We have Bollinger Bands. This is a Bollinger Band strategy. So what I mean by that is that price has what we call Bollinger Bands wrapped around price. So as price moves on, and with the candles move, the Bollinger Bands move they dynamically move with price. So if price starts to move up in a strong direction, the Bollinger Bands will spread apart. And as price starts to go a little bit sideways, which is going up and down, then they contract down. Okay, notice the settings for the Bollinger Band is 200 period, and the standard deviation is 3. Please note this carefully, because the standard settings on Bollinger Bands that most people use in the trading world are 20 period and standard deviations of 2. So I want you to remember this is a Bollinger Band strategy using 200 period and standard deviations of 3. Okay, so and what happens is price just moves in between the Bollinger Bands. So this one, as you can see, you know, the Bollinger Bands are getting lower, then they're getting higher, and as price moves around, the Bollinger Bands will follow them. So it wraps around price like so, like a hand in a glove, like a glove in a hand, you know. So it's wrapping around price all of the time. So now, if we look at this, this is what we would be looking for effectively with a Bollinger Band setup. Okay, we would be looking at the lower band and we'd be looking at the upper band. Okay, so the lower band and the upper band, they always have a mid band as well, but we don't use that for this strategy. So the ethos behind the strategy is that when the price is at the bottom band, i.e. touching the band or just a bit below it, it will reverse back up again. And when price is at the top band, above or slightly, or actually exactly or above the upper band, the price will fall. And we're using these parameters and this ethos to dictate the conditions of, or one of the conditions of the strategy. So when price is lower than or equal to the bottom band, we're buying. And when price is above or equal to the upper band, we're selling. Now, the close of each trade, there are 2 ways each trade can close on this strategy. Now, don't worry, I'm going to show you the rules of the strategy. I'm going to actually create it in front of you shortly so you can see how easy it is to create this. But I'm just explaining the ethos behind this. We want price to go up here, and we want price to come down from here. We want price to go up from here, and we want price to come down from here. So what we effectively do is we would close out the trade here. So the entry is when price is lower than or equal to the bottom band, and the close is when price is at the top band. And that's as simple as the trading strategy is. The sell, that's the buyer trade. This is the sell trade. When price is above or equal to the upper band, we sell. And we close out when price is at the bottom or equal to the bottom or below the bottom band, the lower band. And so on and so on and so on. Now, of course, you have to have risk management in place. That's to close the trade out in profit. However, what happens if the price gets to here and we go into the market, but price doesn't go up, it falls? So we have to build in a risk protector, and we built in a risk protector of 15 pips. So around about where my cursor is now would the stop loss be, and the close would be up here. Now we do have a much bigger target. If this price kept going and going and going and going and going and going up, then we do have the ability with this strategy, the way it's been written, to keep taking that profit as it goes up. So we've got a 15 pip stop loss, and we've got a 1,000 pip target. Okay, so that is in essence when we would look at entering the market here. But to help us know that this is potentially the bottom and the price doesn't actually fall before we go into the market, we use another condition, which is what I'm about to show you. So let me show you the next condition. The next condition is using what we call a stochastic. So the stochastic is a setting, or is a tool that indicates whether the market is either mid-range i.e. it's got a good way to go up or down, or is at its market extremes, i.e. is it overbought, which means is the market at its highest point for now, or is it oversold, which means the market is at its lowest point by now. And you can put these lines on a stochastic. A stochastic is drawn for you automatically on XStation. We'll go and have a look at it in a moment. But these lines you can put on to indicate when the market is oversold. So usually when a market is down here, so you've got your price action above. In fact, let's look at that now. Let me just share my screen and show you that now. Okay, so if we go here, let's go to a stochastic. Let's get rid of the ADX and let's put a stochastic on. Okay, so let's put a stochastic on and show you what I mean. Okay, it's set at 3010 for me. So as you can see here, look, as you can see, price. Okay, let's move that up a bit. Price moves up and down. The stochastic moves up and down too. So it's got movement that runs in parallel with price action. But when the market is deemed to be down here, i.e. oversold, the market normally moves back up again. And when the market is normally up here, overbought, the market starts to fall. It's not the best example to look at, but here, as you can see, look, market was, let's just unautomate that. So as you can see here, okay, the market was at the highest point here because the stochastic was overbought, and therefore you had a good selling opportunity there, which this mirrored with it. And that would have been one of the actual trades that would have been taken, because price was above or equal to the upper band and the stochastic was overbought, in which case then the market fell. So you have two conditions on this to show you where to get in and out. So this one tells you the market is potentially at its high, and this one tells you, yes, it is at its high and it's overbought, market is likely to go back down again. Sometimes you get them across the blue band, but the market isn't overbought, so it won't actually execute the trade for you. So this is the ethos behind the trading strategy. Okay, so I spoke about algos earlier. I spoke about how people have done this over the years, and you know, this strategy we created once we had the ethos behind it. We went into ATS, we created the conditions. It takes about 3 minutes to do, and we had the complete strategy written in a couple of 3 minutes, and then we could back test it and we could run it live. This screenshot here is a video, and I know I want you to just draw your attention to this at the bottom: how to easily code a trading strategy. This guy spent 14 minutes, 10 seconds on YouTube talking about his theory behind a strategy. And the first thing he did, 3 minutes and 57 seconds in, was wrote down on a flip chart or a whiteboard the 4 conditions that he wanted to, in his head, get coded so he could get it to start trading in however many weeks or months' time. The next screen I'll show you shows you 9 minutes 47 seconds into the video that he'd actually started to write out, so gone from his head to the whiteboard, written out the algorithm. Okay, so the coding, or what actually needed to be given to the computer to be able to execute those trades for him. And then if we take the last screen, he's looking really happy for himself, 12 minutes 52 seconds in, that he's actually got a theory in his head, and he's now got it on a flip chart or a whiteboard. And now he's 14 minutes 10 seconds into the video, and then he's now got to get this coded, which takes weeks. He's then got to get it back tested, which will take just as many weeks. And the thing is, when I saw this video, I actually laughed inside, and I smiled to myself, because in 14 minutes, 10 seconds, and I'm not going to do this evening, you can see this on one of our videos on our YouTube channel, but in 14 minutes, 10 seconds, I can, from scratch, create a strategy. I can back test that strategy, and I can set it to run live, and I can actually get a trade executed automatically, completely automatically, in half that time. So this is what the point I'm trying to make, that this particular system, ATS by Trade Insights, powered by Tecton, is a groundbreaker in this industry. And it really is. And you guys that are with us now at the beginning of this, we launched this a few months ago, and you guys are really at the real coalface of this, but in the early period. And in the years to come, there are going to be millions and millions of people using this system, because it takes away the need to watch your charts. It takes away the need to pay for signals. It takes away the need to sit there getting emotionally stressed and emotionally attacked to your trades. So it's a really powerful piece of kit. You don't need this writing your coding strategy out. You can just create a theory, create a strategy in your head, write it on a piece of paper, and then just simply put it into the ATS system, and it will run for you. But I'll show you how that works in a moment. So this is the strategy itself. These are the conditions, okay, guys? So I'll leave this screen up for a little bit. These are the conditions of the strategy. So as you can see, we have 4 conditions that we created for this strategy. We back tested it, but I'm going to go through the conditions first, okay? So we have a buying condition here. This is the buying rule. So when the price of the market, this is on euro against the dollar on a 1-minute time frame, when price is less than or equal to the Bollinger Band 200 3 deviation lower band, and the stochastic 30 10 10 is less than 20, we are instructed to buy. Okay, then when the market moves up to above or equal to the upper band and the stochastic is overbought, over 80, we are closing that buy. So in essence, let me go back a few screens. I'll show you what that means basically. So we're saying when price is here and the stochastic is here, we are buying. Okay, we are buying. And we are closing out when the market is above or equal to the upper band and the stochastic is overbought. So both of those conditions must be met, allowing you to keep those winning trades running longer and killing any losing trades if there are any. Well, there will be, believe me, but it's just there to help you get in and out of the market and keep those winning trades running for longer. So the sell is the opposite. When price is greater than or equal to the Bollinger Band upper and the stochastic is above 80, we are selling. And then when the price is less than or equal to the Bollinger Band 203 lower and stochastic is above or minus 20, we're closing the sell. But we've also got a 15 pip stop and we've got a 1,000 pip target. So I would expect no trade to get to 1,000 pips of profit. That's the one thing I wanted to make clear to you. But we have to put something in there, and 1,000 pips is what we put. But if we put something like 30 pips, you may find your trades are getting run short. You will never have 120 pip winners, or 200 pips. You'll only have 30. So we have to put a reasonably high figure in there so we can pick up some of those bigger wins later down the line. Here are the results. It's losing trades more than the winning trades, but the winning trades in volume, in monetary terms, are much higher than the losing trades. I think the next screen shows you really the power of this, because this is what we call an equity curve. And this is testimony to an automated system, because had you started this back in 2017, it would have initially sort of gone backwards a little bit, but then the thing took off. And as you can see, it's grown and grown and grown. And for it had 2,000 pips of profit. That's 2,200 pips of profit in one currency pair on one time frame. Pairs. You've got 6 or 7 time frames. So you imagine the scope that you can have if you tested this on multiple currency pairs, which ATS allows you to do, and gives you the ability to trade this on multiple pairs. And I'm going to show you the account in a moment that we've been running some multiple pair currencies on, or multiple pair strategies, and how we're doing so far. And it shows you that if you backtest and create a strategy and it works on other pairs, it won't work on all pairs, but you pick a handful of the currency pairs that it works on and get them to run live, you'll soon see immense traction in your trading. Now, this brings me to the emotional side of things, because we have, in the last few weeks, we've spoken to a lot of people, got a lot of people using this platform. And one person here, and I'm not, one person I will talk about, in fact, it's not just one person, we've had about 3 or 4 people that have actually been trading before. And you can see by the way they trade, when they send me their results and they send and talk to me about their experiences, you can see why they're getting things wrong in the past. For example, closing out winning trades early and letting losing trades run. That is something that really kills accounts very, very quickly, because a winning trade, if it's a winning trade and has room to move for more, should be left to run. Let it run to the target. Let it run to your strategy goal. But what happens, of course, is if you see a little bit of green, you want to take it. And then you're losing trades, you tend to let them run because you want them to become winners, but you're prepared to let that happen. And all the time you're letting a losing trade hopefully turn around, you're missing other winning trades that you could have taken. So the whole thing about ATS by Trade Insights, powered by Tecton, is to take ownership of your trading, but let the system do the work for you. And by leaving the system to run, and you'll see if you go back to the previous screen, and I'll show you the history in a moment, every single trade we've got has API as the open origin. Now that means it was triggered and closed out and opened by ATS. So I'm going to just quickly show you the link where everything sits in with regards to the timeline or the journey between you, the trader, ATS, and the broker. So let me just quickly show you that in a moment once I've finished showing you these 3 slides. So you've got the equity curve, which is showing you the growth of the account. Some of the things we're going to be bringing in the future is to recognize when you've got a period of maybe slight negative, and you have intelligence built in to stop the system until it picks back up again. And that's one of the things we're going to constantly, with our development team, be evolving this product and it be improving this product all of the time. So these are some of the trades. So every trade that's actually triggered would have been on here. This is on the back test. This is also the case for live as well. So once you run a strategy live, it will show you where every trade is, the entry price, the open time, the close time, and the result. As you can see, there was 10 trades on here. We had 1, 2, 3, 4, 5 winners, 5 losers, and 5 winners. But look at the winners. The winners, more often than not, were much bigger than the losses, which is what trading is all about. Trading is all about making a growth, but keeping your losses small. Losses small, wins big. That's the best way. You will pick up small wins on this, because the pure nature of the strategy is it closes when the Bollinger Bands are crossed, and then sometimes if the Bollinger Bands are close, then it will only be a small win. But when you get a big run, like you saw earlier, 100 pips, 200 pips, it's really, really great. And I know even some of you guys that are watching this evening know have had some good results like that, because I've seen them. You've sent me your accounts, and I've seen the results. And so I saw a screenshot from one of our guys in South Africa today. They've had 3 winning trades over the last few days, and they've all been really good, strong reward to risk trades. So that's really, really excellent. So let me now share with you and explain to you where ATS sits in relation to the broker and with you, the trader. So I'm going to get my notepad up. So I'm going to share my screen again. Should be able to. So let me just go over what I went through just now. Is that there's 3 people involved, or 3 areas involved in this business. There's the trader, which is yourself or myself, or whoever's actually trading. Then you have ATS, which is the automatic trading software, the algorithmic trading software, and you have a broker, and all 3 are essential in the process. ATS is what keeps it all together. So you, the trader, would be the person that's creating your strategies. Okay. And ATS is where you then enter them. I'll show you how to do that in a moment. You enter them, you can back test them, and set to run live. Okay, so you set them to run live. Your broker is essential purely and simply because they are the part of the equation that will be executing the trades for you. So you have the trader, which is yourself. You have ATS in the middle, where you create your strategies, you back test them, and you set them to run live. And you have the broker. You can, I want to make this very clear, you can, if you wish, trade as well, just directly using the broker platform, using the buy and the sell button on the charts. But quite frankly, why would you want to do that? Because you've now got ATS to do all of that for you. So I just wanted to explain the sort of where everything sits in place, the trader, ATS, and the broker, where they actually sit in the journey of creating a strategy, what executes it, and how the broker executes it. So just remember that ATS is where everything is linked, and there's an interface behind the scenes between ATS and the broker. And whatever broker you broker with, as long as it's a broker that uses XStation, we can get you using ATS by Trade Insights. We've got, we're talking to a number of brokers around the world that use XStation, the charting platform, and there should be no problem for you to do that. So let's get into the heart of the matter now and show you how we create a strategy. So I just want to confirm, can you see the screen with all the trading strategies on? I think you can, so I can see it myself here. So as you can see, we've got an account here that we've got a number of strategies. This is the first screen you will see. Now I've named some. You can name these whatever you want. You can name these anything you want. You can name them strategy 1, strategy 2, Bob 1, Rita 2, Sydney 3, whatever you want to call them. But I've named them country names or name places just to give a little bit more authenticity to them. So we've got a number of strategies here, and you've got 3 settings for strategies. You've got running, you've got draft, and you've also got stopped. Okay, and they mean exactly what they say. One of them is stopped, one of them is running, and one of them is draft. So before I go in and show you how to create the algorithm and the strategy, I just want to play you this quick video that we put on YouTube earlier in the week, which was a video about the live trade on a 1-minute chart. So we're talking a little bit about this chart and this strategy you're going to see in a moment for me to create. So let's just actually play this video for you so you can see that for yourself. Good evening, traders. Welcome to today's video. Today's video is about 1-minute time frame trading. We've been asked many times, is it possible using your system to create a strategy that automatically goes in and out of the market on a 1-minute time frame? And the answer is yes. We've created a strategy. We've created using ATS. It took about 5 minutes to create the conditions for it. We've back tested it. It gave us a result of over 2,500 bits of profit on over a 2-year period, and it's on euro dollar. In essence, what the trading strategy does, it recognizes the lows and the highs of the market using Bollinger Bands and Stochastic. And what it does is it recognizes there's a turning point in the market and will get into the trade in the appropriate direction for you. Now, to close the trade, you've got 2 options. We have a stop loss, which is set up, and a target. We also have a close by close sell function, which enables you to get out of the trade early if it's becoming a losing trade. So we kill the losing trades early and allow our winning trades to run. So it's all done through ATS by Trade Insights. And remember, ATS by Trade Insights, powered by Tecton, is a system that allows you to automate your trading without any coding knowledge. You don't even know to understand what an algorithm is to be able to use it. You don't need to understand how to code an algorithm to be able to code it. And you certainly don't need a following video shows you the strategy. So thanks for watching so far. And the next few minutes will show you the strategy, the conditions, the setup, how it works, and even show you some live trades on it as well. Thanks for watching. Bye for now. Hi everybody, welcome to the video today showing you a live video of a trade that triggered around about 1:30, about an hour and a quarter ago. So if you've been watching our videos, you would have seen the trade setup is when price crosses below the Bollinger Band, or when price is below the Bollinger Band lower and the stochastic is below the 20, we buy. And we've got the target set up here. So we're well on our way up to the target right now. It's around about 60 pips to the good, which is fantastic. So we're hopefully going to hit target within the next probably, I don't know, about 15-20 minutes or so. But yeah, just to reiterate how the trade system works is that we have a situation where the Bollinger Band's 200 period. Okay, so we have Bollinger Band's 200 period, and we have the standard deviations of 3. Okay, so the normal settings on Bollinger Bands are 20 period, standard deviations 2, but we're using Bollinger Bands 200, standard deviation 3. And we're using the stochastic. So the stochastic is what controls the direction and controls the timing of the entry. So the stochastic, when it's overbought, i.e. above 20 in this area here, we are selling. When price is above the Bollinger Band upper band, and when price is below the band here, and the stochastic is below 20, we are considered to be in an oversold market, and then we're looking to take the move up. So as you can see, the move has gone up quite strongly, and it's almost hit our target. So what will happen is once it hits our target at the top here, it will close the trade out and it will bank the profit. So at the moment it's 103.30, so 1037, and we got in at around about 90 pips. It's almost 100 pips now. We got in at 109.40. Okay, so we got in down here, this line here, 109.40. So that was our entry price, and there is our target. Okay, and just so you know, we got a stop loss there as well. Stop loss was down below at 15 pips. So we're now waiting for this to push up, push through this line here, which is the upper Bollinger Band, and then it will take the profit for us automated. And remember, this is an automated strategy using ATS by Trade Insights, powered by Tecton. You've seen the conditions on the strategy setup. We showed them on a previous video. So it's the when the Bollinger Band 200 and standard deviation of 3, when they are when price is below that lower band or above the upper bound, that is when we're looking to trade, and we're using the stochastic as the entry. So it's a dual entry, dual indicator entry when both are aligned. So the alignment must be the stochastic overbought and the Bollinger Band price above the Bollinger Band, and stochastic oversold when the price is below the Bollinger Band. Now, this is on a 1 minute time frame. It's on a 1 minute time frame, and it's on euro against the dollar. So it's euro dollar, 1 minute time frame, Bollinger Band 200, standard deviation of 3, and the stochastic setting, just so you remember, is this one here, which is the stochastic 30 period, 10, and the slowing is 10. So it's setting of 30, period is 10, slowing is 10. I know it's a little bit different to the normal settings on a stochastic. We've tested this out and it's producing some very good results so far. I think we've had since Friday last week, so just under a week, we have had, I think it's around about 15 trades and only 2 or 3 losers out of that. So that's a pretty good success rate. So anyway, that's the trade strategy. If you want to get hold of this, contact us on the contact details you see following this video, and we'll be more than delighted to get you started on using ATS by Trade Insights, powered by Tecton. Thanks for watching. Bye for now. Hi everybody. So just a few seconds ago on the previous clip you would have seen the trade that we've been running here, which was the Bollinger Band buy trade, which was automated once the stochastic was under the 20 level and the price was below the Bollinger Bands. And what's happened is, of course, the target is quite a high target because of the Bollinger Bands have expanded really drastically. So as you can see here, the Bollinger Bands on the setting, the 200 standard deviation 3 setting is usually no more than about 40 or 50 pips between the two sets of bands. However, because of these massive spike earlier when the news release has come out, the Bollinger Bands now have expanded so much that the gap between the two sets is over 200 pips. Okay, so between here and here is over 200 pips. So of course what's happened is, because the target is the Bollinger Bands, the target is a higher target than what it's normally going to look at taking using the automated system. So what I'm going to potentially look at doing in a moment, if it struggles to break this level, which is potentially where the Bollinger Bands usually would be, I'm going to potentially close this trade manually because it may not get to its target. So I'm waiting for it to break through 1050, which is currently at 1046. If it breaks through these highs, I suspect it will get to a target. But it looks like it's actually just flattening out a little bit right now and potentially just not going to hit the target. So I'm going to wait just a few moments more. When you last saw this clip, we were down here. Okay, so we'd had a strong run up. We're not just sitting here placing trades manually. This was a trade that was placed automatically using the conditions that were explained on the video that was sent out on YouTube a few days ago, called 1 minute algo trading, 1 minute scalping video. And that video showed you the conditions. It showed you the rules for the strategy, showed you how to build it. It showed you the risk management on it, and it showed you also the back test result for it as well, and the back test result produced over 2,000 pips of profit over the period that we tested. So it's not a bad strategy whatsoever. It's on a 1 minute time frame. It's on euro against the dollar, and right now we're just sitting here waiting for this to sort of take off a little bit more, which is looking like it's increasingly less likely to do. So what I'm going to do is I'm going to close this trade manually because, as I said, the targets would normally be here. So I'm actually quite lucky. I was just looking at this because I saw the Euro news came out earlier, and I just wanted to see what it was causing to the markets. And then I noticed these Bollinger Bands became quite spread apart. So I'm going to close this trade out manually now. And we're going to take it from there. So let's go back to our charts. Get rid of our charts, close the trade, and that's taken the profit. And now what we're doing is we're going to wait for this to move up here eventually, or the Bollinger Bands to move down. And when the price eventually catches up with the Bollinger Bands, it will look to take a sell back down again. So thanks for watching, and bye for now. Okay, everybody, so we're back now, and we're back to talking a bit about that video. So the video, as you could see in that video, it was a simple strategy. I've created the strategy. I've shared the ethos behind the strategy. I'm now going to show you how we write it and how simple it is to write this condition for this strategy. So we're back on our platform. We can see we've got a number of strategies running. Some of them are doing okay, some of them not so well, but generally speaking, we're doing okay with this. It's 250 pips up in total. So I'm going to show you how I create this new strategy. So let me just log into the account. Okay, and we're back in again. So the first thing we do is create new strategy. Now, I'm not going to back test this strategy. I'm going to create one in a moment that we'll back test to show you the speed and power of back testing, because this one has multiple conditions. It does take a while to back test. It's still a lot quicker than most trading systems out there, you know, but this one could take up to 6 or 7 minutes to back test each individual setup. So the first thing we do is we need to add the algorithm. So I'm now going to show you how to create this strategy. Okay, so I'm now going to share with you how to write this strategy. Okay, so the first thing we need to do here is we need to click add algorithm. Okay, so if you remember rightly, we had a situation where we wanted the price to be less than or equal to the bottom band, and we wanted the stochastic to be oversold at the bottom too. So let me show you how simple that is to write that. So we have if pre-populated. We go here and we use if price, and we simply click price like so, is less than or equal to the Bollinger Band. We simply type the letter that of the indicator we want to use, and we put the settings in here. Remember, it's different settings, so it's 200 period and 3 period, and we're using the lower band. Okay, so if price is less than or equal to the lower band, and so we can have and or we can have or here, but we're going to use and because we want both conditions to be met, and the stochastic, which you remember measures overbought, oversold, settings of 30, 10, and 10. Apply. Okay. So that's set that up. Actually, that needs to go back to signal indicator stochastic. 30, 10, 10, signal line is less than 20, less than that number 20. So it's at the bottom. So it's actually down at the bottom. Okay. The action will be to buy. Okay. And that has now created our buy condition. That's created. What that's done in about a minute of doing that is what those screenshots I showed you took 14 minutes to actually write down on a piece of paper or on a board. This is actually put it into a system that will allow this to be traded. Now I need to add the close buy. Okay, so when price is more than or equal to the Bollinger Band, 200 period 3 upper, and the stochastic (30, 10, 10 signal is more than 80, we're going to close the buy. So it's got to an overbought position. The market has got to its highest position. We want to close that buy. Action, close buy. And that's done. So in a couple of minutes, we've created our buy and we've created our close buy. We want to now do the sell. So the sell is the opposite way around. So when price is more than or equal to Bollinger Band, 200, period 3, upper, and stochastic 30, 10, 10 is more than 80. We're looking to sell. Now, what you've noticed there, if you've watched this carefully, is that the close buy and the sell are the same condition. So what this is designing it to do, take a buy, close the buy, and the market's recognizing it's not going to go any higher, so the system's bringing the price down. So you're actually closing your buy and then selling. So you'll have trades opening and closing, and another one opening the opposite direction. So you're in the market only once, but you're only taking a trade in one direction or the other. And that's the beautiful thing about this strategy. It will, when it's having a run of winning trades, it will keep running. When it has a losing trade, it then won't trigger another one until the conditions reset themselves. Beautiful thing about this particular strategy. So the close sell is when price is less than or equal to Bollinger Band 200 standard deviations lower, and stochastic is less than, so 30 is less than 20. So we've now written the open buy, close buy, open sell, close sell. We now need to put in here the stop loss, so it'll be 15, and we want a high target of 1,000. So the currency, the strategy will use the close buy and close sell to close each trade automatically for you. On the euro dollar time frame, you can run on any currency pair. We're going to run this on euro dollar and on a 1 minute time frame. And then you would backtest. Now, I'm not going to backtest this because it does take a few minutes to backtest this one because of all the different conditions. But in a moment, I'm going to create another strategy in front of you on a moving average cross and show you how quick the backtesting takes. Okay, so we can save this as Bollinger Band with stochastic. Okay, so in a moment I'm going to show you how to create another strategy, and we'll actually backtest it because I have a simple condition on there. But there's one or two things I just want to quickly share with you. The first thing I want to share with you is the process that we suggest you follow if you want to use this system. Is the first thing you should do is open up your demo account. A demo account is valid for 2 months. And the reason why a demo account is only valid for 2 months is because if you get caught trading a demo permanently, you will never make any money. Because the last thing you want is a demo account that's making you a profit from the trading strategy you've created, but it's not making you any money. It's just showing you virtual profit. So what we suggest is open your demo account at the Trading Sites website. So that's tradingsites.com/ATS. or tradingsites.co.za/ATS. Open up your demo account there and you'll get your demo account login immediately. And at the same time, open your live account with the broker that is in the region you are in. Because the last thing you want to happen is trading demo. Nothing wrong with trading demo, but have your live account as well. And that's exactly how we run it. We run our trades, once we've back tested, we run them on a demo account for 2 or 3 days, then we get them running live. You saw the video that I showed you just now using a live account. They had real there. So we don't just sit there trading demo. We use demo for demo purposes, and we use demo for creation. We use demo for testing, and we use a live account to execute. Because there's no point in sitting there trading demo forever. You will never make any money. So it's all about getting you live and getting you trading. So that's one of the first things I want to just get across to you. Now, the other good thing that I want to offer out to you guys is that if there's any of you traders out there that have strategies that you're currently using and you're looking for signals to go in and out of the market, or you're looking for opportunities to go in and out of the market, send us your strategies. We will code them and put them into ATS for you for free. And then you can show you how quickly it is to set them up, how quickly it takes you to backtest them, and how quickly it takes you to set them to run live. So send in your strategies. I'll put up an email address at the end. Send in your strategies to us if you want us to do that, or if you want to get a demo version of this and a live version of this and do it yourself, feel free. It all depends on how you feel, how comfortable you feel. We have a whole wealth of support and knowledge around to help you and do it for you if you need to. But if you're just going to sit on the sidelines and just play with a demo account, then you're not going to benefit from this system. You're going to benefit from this system by getting yourself live with that support of demo in the early period for each strategy. So you do need to take actions, the serious actions really, when it comes to opening accounts. Okay, if you are new to trading, no problem whatsoever. We're running workshops, educational webinars and workshops from October onwards. So another 12 days, we're going to have a constant stream of webinars and workshops that you can get yourself involved with. If you're a trader, you should be able to get on board and use ATS straight away, pretty much straight away. We've got a whole wealth of videos on how to do this, how to do that. But again, if you need help and support with that, then it's not a problem. Just get in touch with us and we'd be more than happy to help you. That is what we are here for. We intend to get this out to the world, because it is a fantastic piece of kit, especially when you see how quick it backtests, which is what I'm going to do now. So let me just save and rename that. Okay, that's done. And let me go back, and now I'm going to create a new strategy. There we see we got the strategy. It's draft because it hasn't been set to run live yet. But in theory, I've actually already got one of these running live, which is this one here. As you can see, it's running live. It's called Budapest, because Budapest is a European capital. And it's currently doing really, really well, as you can see. It's 160 pips up, which is for this since August the 27th. So it's actually really, really doing well, this strategy. So let me create another strategy, and I'll actually back test this one. So this one, I'm going to use a simple moving average cross. Okay, so for those of you that know what moving averages are, they are basically lines that follow price, and rather than wrap around price like Bollinger Bands, moving averages move just one line at a time. So they're one single line, but you can put as many of these on as you want. So you can have a fast moving average and a slow moving average. For example, a 50 and a 200. So one is measuring the 50 bars and one is measuring the average of the last 200 bars. So let me show you the ethos behind that. Let me just get rid of this and get rid of that and get rid of that. So we've got price action. Let me put a moving average on. So we'll put a moving average on of 50, and we'll color that red. In fact, we'll do nice bright colors. We'll color that yellow. Okay, make it thick as well so you can see it. Okay, there we go. So that's measuring the last average price of the last 50 bars. So when price is going up, it's usually above the moving average, and when price is going down, it's usually below the moving average. So, okay, this is stuff that we can teach you if you're not following. I just want to just give you the nuts and bolts of this strategy and then demonstrate the system. So now we're going to do the 200. We'll color that white, and that's thick as well. So there we go. You've got two moving averages, okay? And usually when the slow moving average is above the fast moving average, okay? Sorry, when the fast is above the slow like this, price is going up. And when the fast is below the slow, price is going down. So in order for them to switch like that, they have to cross. Okay, they have to cross each other. Notice what happens when they cross. Price normally falls quite hard. So we can create a strategy based on that. So let me show you this strategy. Okay, so now what we're going to do, now we've created a strategy, the strategy we spoke about at the beginning. I did say that we weren't able to back test it purely and simply because the time it takes to back test, but I'm going to demonstrate now how to create a new strategy and also one that we can back test. Now the strategy, this particular strategy is based on moving averages. Now moving averages are lines plotted on your price, and in essence you can have one moving average, but they work better with multiple moving averages. Now, a moving average plots the average price of the last number of bars. So we've got two moving averages on here. We have a 200 and we have a 50. Okay, we have a 200 and we have a 50. And one of them is obviously a fast and one of them is a slow. The slow one is the 200 and the fast is the 50, because it's measuring the most recent 50 bars as opposed to the most recent 200 bars. So usually when the moving average, slow moving average, is below the fast, i.e. the white is above the green, as you can see here, price is usually going up. When the white is below the green, so when the white is now below the green and has crossed, price is usually falling. Okay, so what normally happens is moving averages give you an indication as to the direction of the market, whichever market you're looking at. And we're looking at euro dollar on a 30-minute time frame. So what we're looking for here is to trade when the moving averages cross. So for example, as you can see here, the moving average has crossed here, price has gone up. Moving average has crossed, price has fallen. Moving averages have crossed and just now have just crossed, price is going up. So these moving averages do cross quite a few times every single day. Sometimes they only cross once or twice a week. But for example, if you look here, okay, moving average crossed here, and then price gradually just fell away. So these are trading opportunities we can take. So we can create a strategy. Again, here's one here. They crossed and price fell. So we can create a strategy using ATS based on the moving average cross. And that's exactly what I'm going to do on euro dollar on the 30-minute time frame. So let's go to ATS and let's show you how we create that. So we click create new strategy. And we're going to set this up on euro dollar, as you can see here. We're going to set it up on a 30-minute time frame. And we're now going to write the conditions. So the first thing we do is add algorithm. And this is a very simple algorithm. If moving average, okay, so the moving average, and it's an EMA. There are various different types of moving averages. We're going to use the EMA for exponential, which means that the average is weighted to the most recent data. So EMA 50 crosses above the moving average 200. It's as simple as that. That now has created the condition. All we need to do is the action, which will be action to buy. And that's confirmed the algorithm for the buy condition. It's that simple. Now we create the sell. So if moving average 50 EMA crosses below the 200 moving average, the action is to sell. And that has created the conditions. Now we want to put the stop loss and take profit in. I'm not going to use a close buy or a close sell function here. We can use the moving averages when they cross back again as the close of the trade. But I'm going to use a 21 pip stop and I'm going to use a 67 pip target. Now those settings show you that we're looking for it's at least a 3-to-1 reward to risk. So every trade that wins over 3 times what one losing trade would do. So I do expect this to get losing trades. I do expect possibly to get more losing trades, but the overall profit should be quite strong. So we've created the strategy. I just want to save it now and call it EMA cross. EMA cross. Save that. It's named the strategy. Now I'm going to run the test. So we run the test. Just scroll down a little bit so you can see what we're doing. We've got the source data, which is candles, which is great. We then have the choice of testing either specific time periods, 1 day, 1 week, 1 month, 2 months, 3 months, this year, whatever you want to do. But for this test, I'm going to test over all data. That's 2017 to today. So that's actually about 2 years worth of data. So we click run test. And now that is actually back testing through euro dollar on all of the previous price action on a 30-minute chart, what would have happened every time one of these conditions would have been met. So it's actually giving us, and it will give us in a moment, a result of what would be the result had we taken all of these trades. Now remember, you don't have to push buttons, you don't have to buy or sell. ATS by Trading Sites will do this for you. So every time the conditions are met, it will take the trade, and it will still keep the trade running until either the 21 pips is hit or the 67 pips is hit as profit. So it's going to do a back test now. It shouldn't take that long. It probably will take about a minute. It's taken about 35 seconds so far. Anything from a 30-second to a minute, minute and a half for the back test, depending on the internet connection at the time. And then it will give you a result. And then once it gives us the result, we can have a look at it. So what it's doing is it's scrolling through all of the price action for those periods, which is a lot of data, huge amount of data. You know, every day there are 48 30-minute candles, and it's going over 2 years of those days. So it will take a while to do, but it's the quickest back test that I have seen anywhere out there. This is really rapid. Some back tests I've seen take hours and hours and hours just for 1 day of testing. So this is done. We've got a result that took about a minute. And we've now got 3 areas to look at. We've got the results, the profit and loss chart, and the trades. So let's look at the bottom one first, the trades. So the trades it would have taken, it gives you a list of all the trades it would have taken. So as you can see, there's a winner there, a loser, a winner, a winner, a winner, a loser, a winner, a loser, a loser, a loser. So there's actually 10 trades on that list, on that particular screen, 5 winners, 5 losers. Now if this is over 3.5, or say 3-to-1 reward to risk, and you'd place just 1% risk on each of these trades, those 10 trades there, 5 winners and 5 losers, would have given you a net gain of 10%. 10% return in about 3 weeks. So this was the 11th to 12th of July, and this is the probably about 6 weeks, 30th, 27th, 30th of August. So it's about 6 weeks worth of data there, and it gives you pages of this stuff. Okay, so there's another page, lots of winners there, and so on. So that gives you the list of all the trades. So we just close that. Now let's look at the results. The results have given us a profit of 1,429 pips. It's taken 58 winning trades and 117 losing trades, but remember, the winning trades are more than 3 times the losses, hence the reason why you've got a healthy P&L here, very healthy P&L. If you're trading out 1 CFD, for example, which is around $10 a point, you know, that's $14,290 of profit just in one system, one currency pair, one strategy, one time frame. That's the power, and you wouldn't have actually had to physically place any of these trades yourself. It would have done it for you. So the last thing to show you is the profit and loss chart. So this shows you the actual growth of the account in that period, and at the beginning, as you can see, it went downwards. There was a little bit of negative equity, and had you been watching that live, you probably would have thought, well, I'm not taking this trade anymore, this strategy doesn't work. But because you wouldn't have needed to be watching, ATS has carried on trading and got into profit. And it's taken up to a nice healthy profit here up until the most recent data. Now just one thing to mention to you here, moving forward, we will be looking to introduce a sort of drawdown limiter, so it will recognize when it's going through a downward patch, and it will switch the system off and then reignite it when it notices it's going back up again. So which is a really, really great piece of AI, artificial intelligence, and that's something which we're working on at the moment to include. So the system will recognize when you're in a period of slight pullback, although it's not a pullback to a loss, the whole system generally is going up in profit. It just means that you would have eventually made more pips. You've actually made more pips if you're able to sort of limit that drawdown a little bit there and a little bit there as well. But generally speaking, this is a very healthy success strategy. So that's how to create a strategy on ATS. That's how to create a strategy, and we'll back test the strategy as well. And we're actually running this one live. This is the one we're running live that I showed you before, and as you can see, we're having a pretty good success rate with this one. If you look at the trades that is actually taken, this was let's go back to page 1, which is the page 1 we want. So this is the most recent data, 27th of August. and this is winning trade. So for the month of July and August, this has been running. And also, if you go back to a little bit further, June, May and June, you can see it's quite positive, good positive trades there. Okay, so this is one of the ones we have actually been running live and had a very good success rate with it. So that's how to create a strategy using ATS, powered by Tecton. Trading sites, we're really proud to have this system for use by all of our clients. And what I'm going to do now is I'm just going to switch back to my other screen, and I'm going to just close the webinar off and give you some useful pieces of contact details, and see if we can get some of you guys that have got demo accounts trading live, and help you with some trading moving forward. Okay, so that's really all I wanted to cover this evening on the webinar. We've covered two strategies, one that was already back tested and showed you how profitable that's been over the coming, or this last month I should say. And also shown you a strategy created from scratch and back tested, which proved to be quite profitable, which is obviously this one here. So the last thing I want to just go through with you guys is this information here. So just bear with me, so I'm just bring this down. So the way this is all set up is ATS by Trading Sites is fully connected to the XStation charting platform via interface. So every time you send or you create a strategy and set it to run live, that signal is sent to XStation charting platform, which is the charting platform I showed you earlier. Now, depending on where you are in the world, will determine which broker partner you will be using. So for example, all of the UK and European clients, our regulated broker, and all of our broker partners are fully regulated. Our regulated broker partner is Patron FX, who will basically execute your trades for you. Once ATS has been set up and the strategy has been created, and they will obviously manage the account for you. All the money that's deposited is deposited into a Barclays bank account with Patron FX, and it's a segregated account, so it's fully protected. It's your money, it's segregated, and it's used only for trading. For other areas in the world, including South Africa, all African countries, and other areas in the world apart from USA and Canada, our regulated broker partner is XTB International, who are an award-winning brokerage. They are also part of the company that own XStation, and they are also our liquidity providers as well. So they are a very, very reputable company, and they've got a very, very good reputation. And we're delighted to have both Patron FX and XTB International as our worldwide partners for brokering. They're not they're fully ethical brokers and regulated brokers. So the last thing just to say to you is, guys, look, you can sit on the sidelines and just basically watch this happen, or you can get involved. And the best way to do this is to get yourself a demo account open if you haven't yet. Get yourself a live account open. I did say to you at the beginning, we had a guy who's like 12% up on his money for the first couple of months or so, but he was only trading a demo account, so he's really not up at all. It was just practice. And you don't get anything in this world for just practice. You've got to actually get in there and get involved and get yourself making money. So the best advice I can give you is get a demo account. We're going to set up a landing page, so we're going to send that out to you, those of you that are registered with us, and get yourself a demo account, get some of the strategies set up. Remember, tweak the strategies you've seen tonight. Create your own strategies. You can't break the system. Try things, try different things, and if you create a strategy, you'll never know. It might be one of the best ones we've ever seen. There's only so much one person or two people or three people or four people can do. So we have strength in numbers. So get yourself on ATS, get yourself creating strategies, back test them. You can edit the time frame, edit the pair, and before you know it, you could have something that is really, really successful. So get yourself a demo account, get yourself a live account set up. And if you need any information at all from us, or need any help at all from us, we are here to help. and are committed to help and get ATS by Trade Insights powered by Tecton as the first thing on people's mind when they want to trade the currency markets and other markets moving forward. I really thank you for your time this evening. Thanks for watching, and I look forward to hearing from you soon. Bye for now.